Good afternoon, everyone, and welcome to our latest 10-minute takeaway. Today, we are joined by Michael Shapiro, who is property partner at Fletcher, and he's going to be giving us an update on the current state of the property market. Good afternoon, Michael.
Yes, hello, Julie, and this is my first full day in my new office in 110 Cannon Street, so it's nice to be busy.
Excellent.
Okay, everybody. Firstly, thanks very much for listening to me. In the time allotted, I've chosen a couple of property highlights which are relevant to a headline of the front page of the Times recently. Britons face higher taxes to pay for eco pledges. The article continued about either facing new taxes or reduced public spending to pay for the country's transition to net carbon emissions at a zero rate. The plans include a £26 billion investment to decarbonise the economy with new money for nuclear power plants, home insulation, and electric vehicle charging points. COP26 is now in its second day, so I think I'm going to start talking about the relationship between COP26 and real estate, and in particular the future of real estate, because most businesses, property or otherwise, are looking at their sustainability strategy, and that seems to be the big buzzword so far on day two. The built environment is responsible for almost 40%, I'll say that again, 40% of greenhouse gas emissions globally. So to achieve a net zero economy, the real estate industry will have to change, and change significantly, not just talk about it. I wrote those words last week, but it's interesting watching the news last night. I was rather chuffed that a number of world leaders said it's got to be deeds, not just words. So we all do seem to be speaking from the same page. It is anticipated that we will see huge sums spent on adapting existing buildings to make them more energy efficient. It will be an exercise in changing the past rather than building the future for many landlords. So those of you who are tenants, do look at your projected service charges. There's a lot of new building going on in the city at the moment, and walking around, even at lunchtime today, I noticed that more and more new buildings are advertising not only the facilities they offer, gyms, retail units, bicycle parks, etc., as well as the usual floors and floors and floors of offices, but they're also boasting about the air cooling, the roof gardens, the windows that go dark with the sun, solar panels and sensory lighting. Tenants want an ecosystem in their buildings made up of numerous lifestyle events. However, the net zero pledge seems to be hindered by a lack of green offices. I read yesterday, and I'm going to quote from the Times, that there are a lot of firms, particularly the larger London, say, law firms or insurance brokers, who are also taking offices in regional centres. And it was interesting to read that only an estimated 16% of office stock in those regional locations, the usual Birmingham, Bristol, Cardiff, Edinburgh, Glasgow, Leeds, Manchester, only 16% of office stock in those locations are rated good to outstanding when judged by the Building Research Establishment Environmental Assessment Method, which is a measure of sustainability. Green finance is on the rise. What is green finance? Again, it's another of these buzzwords. My understanding of it is very straightforward. It's any form of financial service that includes sustainability and reduction of a carbon footprint into their investment decisions. Green loans can be used to fund green projects, for example, some of the big city buildings, and some lenders are offering margin reductions on green finance. This will mean that borrowers should expect a higher degree of due diligence on the part of the lender, who will be looking for a real commitment in meeting green requirements. I've seen this in mortgage instructions when clients have been buying buildings. For example, carbon reduction targeting new projects, biodiversity targets for development sites, and energy usage across wider property portfolios. Another buzzword, of course, is energy efficiency. People don't always realise what it is, but it's the rate at which energy is lost through the building structure, i.e. outwards, and the rate at which energy is consumed by its occupiers. There is already a regulatory framework in place in that properties cannot be sold, leased, or occupied unless they meet a minimum energy efficient standard, known, of course, by the acronym MEANS. The 2015 regulations make it an offence to let residential or commercial property with an F or a G rating. Yet another buzzword that's come about recently is retrofitting, which is the improvement of existing stock by complying with energy efficient standards, bearing in mind the cost of upgrading the asset. Very important, again, look at your service charges if you're a tenant, because who will pay? For example, LED lighting in common parts is relatively inexpensive, but air conditioning and heating improvements can be both costly and involve major interruption to occupiers and a possible cost on the service charges. Another phrase that's become popular is smart buildings. This is the central control and analysis of the resulting data from automated technology or processes to promote more efficient use of facilities and resources. Indeed, many of them now have smart meters installed at home. One thing to watch out for, particularly if you are a tenant in one of these buildings, is the alterations clause. Leases have now, over the past couple of years, included green clauses, but we are now seeing specific green requirements within alteration clauses in a lease where a tenant requires landlord's consent to make those alterations. Green clauses can include waste management and the collection and recycling of refuse, and certain alterations are looked at by landlords as to how they will perform environmentally. So there tends to have to be a form of cooperation between landlord and tenant, which is something that both parties are in favour of. Post-pandemic, tenants now have sustainability criteria, so they are keen to go looking for eco-friendly workplaces. As a result of this desire, last week's Estates Gazette showed that some West End rents are now back up to around £117.50 per square foot, and city offices are now climbing at £75 per square foot. So the next topic that I want to talk about are electric charging points. £62 billion of funding for zero-emission vehicle grants and infrastructure will be available, and this will include electric charging points on residential streets. The sales of electric and hybrid cars have rapidly increased over the past few months. I know where I live, I've just bought one, and half of my neighbours seem to have bought either electric or hybrid cars. The problem is that electric vehicle charging points, known again by an acronym EVPs, are being installed more slowly than the rate at which electric cars are being bought. In June 2021, the sale of electric and plug-in hybrid vehicles were up 161% year on year, and these need charging. A commercial EVP can range from £1,000 to £3,000 in price, depending on the model and range of vehicle compatibility. Even to install a personal charging point, like I've just installed, will cost around £500 after the £350 grant has been made. There is a workplace charge scheme which can be used by businesses to reduce the upfront installation costs, and up to 40 charging stations can be claimed on this scheme. This can be claimed by any registered business, charity, or public sector organisation who can demonstrate a need for an EV. The business must have dedicated off-street parking for staff or fleets and must own the property or have the consent from the landlord for the EVPs to be installed. I recently had a client who wanted to install a number of these in their communal car park. We checked the lease, and the alterations provision meant that landlord's consent was required. As it happened, at present, my client is not proceeding because they're looking for larger premises. But more importantly, the current electricity supply was insufficient, so a new electricity substation would be needed, and also easements were required for the installation. EPVs are considered development for a freehold owner under town and country planning legislation. But the big benefit, particularly for a commercial landlord, is that it demonstrates the business's green credentials. It is a perk for staff, and there will be a cost saving where the business is paying for the running of the vehicles. Freeholders are starting to install EVPs so that all their tenants, say in an industrial estate, will be able to share the use and the cost. The freeholder can then deal with the negotiations that put my client off, namely the distribution network operator for cabling, although most of those operators require longer leases or a freehold. I've yet to be asked to advise about the installation of EVPs and in particular reinstatement obligations at the end of the term. This could be an interesting point. And finally, I'd just like to have a brief discussion on the current state of the market. Because as we all know, the pandemic led to a huge surge in e-commerce and consumer demand for delivery. New warehouses are springing up. We are in the era of the giant shed. For those of you who are looking at taking one of these sheds, either buying as an investment, and I suspect it will be a very good investment, being a freeholder, or as a tenant, the important thing is to look at the terms of the lease. For a tenant, particularly, look at the length of the term. If possible, get a tenant break option, as we will see that this surge in demand continues. I'm sure that it will. I don't think it's just been a one-off of the pandemic. I read recently that Barclay, the major house builder, and Segro, a major warehouse owner, are building a 6-story shed at Grand Union, a mixed-use development in northwest London. The first floor is parking, with 20 industrial units in the other stories, with a roof garden on top. Sustainability there, together with solar panels and a green wall. I think these are going to be buildings of the future. Statistics have shown that warehouse vacancy rates are at their lowest ever, with demand booming during the pandemic. It is important when taking, say, a lease of one of these sheds that you have the exact measurements of both the internal and external areas. The external areas are important for storage, loading, and parking, and the internal area is important because of the ratio of office to industrial space. It can be an expensive alteration to install office space into a warehouse retrospectively. If racking is needed, then go for a high building. They are much better value as the footprint is based on what the rent is based on, how the rent is calculated rather than the height. On these shed warehouses, there are the usual points to look out for: security of tenure, services, what repairs the tenant is liable for, the state of the building to be handed back at the end of the term, and importantly, ensure that you have additional power capacity if heavy machinery or additional floor loading is required. And don't forget to look at how many doors you need and the size of those doors. And it's always worth discussing capital allowances with your accountant, as the savings from tax relief through capital allowances can be considerable. Some positive news, looking particularly for landlords of offices. It was interesting to read last week that Great Portland Estate, a major player in the capital, have recorded their best quarterly rent collection since before the pandemic. They say that 84% of all rent due at the September quarter has been collected, compared with 73% in March and 76% in June. And I have heard similar proportions increasing quarter on quarter from clients. And then finally, a bit of good news, which I saw in yesterday's paper, that London has been voted the best city in Europe for real estate investment, beating off competition from Paris and Berlin to become the highest ranked European city for property investment, according to a survey of industry executives. 850 people replied to this survey. Half the respondents thought business confidence, profitability, and headcounts will rise in 2022. And the main reason that London pulled ahead was because it offers better value for money, with investors earning a yield of about 1 percentage point higher for properties in the capital compared with continental peers. So, well done, London. And in conclusion, we have discussed areas of growth, but to me, the key is still to get workers back into the city, particularly. This will have the knock-on effect in cafes, bars, restaurants, and retail. I still don't see the city anywhere near as crowded as it should be. So maybe some controls, such as enforced mask wearing on all public transport and in public places, will give people the confidence to come back for at least a couple of days a week, because it is a great place. And with that, thank you all for listening. If there's anything that's arisen because of this talk or anything in relation to your property matters, please do feel free to contact me. Meanwhile, everybody, take care and hope to see you all soon. Thank you.
Okay, thank you for that update, Michael. There's some really interesting points in there, including a whole new definition of the word shed. Having seen some of these enormous buildings, shed is not a word that readily springs to mind. As Michael says, if there are any issues that you would like to contact him about, he is available on michael.shapiro@fletcherday.co.uk. So that's michael.shapiro@fletcherday.co.uk. Thank you very much for your time, Michael. Always appreciated, and we look forward to hearing from you again soon. Take care.